It starts with one sign. You drive past it on your way to work on a Tuesday morning, a standard for sale sign on a well-manicured lawn in a quiet suburb of Mississauga, or perhaps a townhome in Langley. You don't think much of it. People move. Life happens. But then, 2 weeks later, you see another one 3 doors down, then another one across the street. Suddenly, the street that hasn't seen a moving truck in 5 years looks like a used car lot. The signs are multiplying like a virus. And the most disturbing part isn't the number of signs. It is the fact that they aren't changing to sold. They are sitting there. The grass is growing a little longer around the posts. The price-reduced stickers are being slapped on top, peeling in the rain. You are witnessing the beginning of the most dangerous phase of a real estate crash. And you are witnessing the inventory tsunami. For years, the real estate industry, the government, and the banks have fed you a single, unwavering lie. Housing prices can only go up because there is a shortage of supply. They told you that Canada is bringing in millions of people and we aren't building enough homes, so the laws of supply and demand guarantee your equity will grow forever. Welcome back to Canada Property Watch. We have chronicled the exodus of the population. We have exposed the banking insolvency. But today we are shattering the supply shortage myth. We are looking at the terrifying reality of panic selling. The narrative has flipped overnight. We are no longer in a market of scarcity. We are entering a market of liquidation. 500,000 homes are preparing to hit the market. Driven by the exodus we discussed in our last report and the mortgage renewal wall that is finally breaking the back of the Canadian homeowner. In this deep dive investigation, we are going to explain why the spring market of 2026 is going to be a bloodbath. We will break down the psychology of the seller's delusion and why it is about to shatter. We will expose the collapse of the investor class who are currently bleeding negative cash flow and rushing for the exits. And we will explain why no one is buying, creating a standoff that can only end in a price collapse. To understand panic selling, you first have to understand the psychology of the bag holder. For the last 15 years, a house in Canada wasn't a place to live. It was a winning lottery ticket. It was a retirement plan. It was a magical ATM that printed money while you slept. Homeowners felt rich because their Zestimate went up by $10,000 a month, but that wealth was phantom. It was paper wealth. And now, as reality sets in, that paper wealth is evaporating. The panic starts when the neighbor sells. When the guy down the street, who has the exact same floor plan as you, lists his house for $1.2 million and it sits. Then he drops it to 1.1, then 1 million. Finally, it sells for $900,000. You sit at your kitchen table and realize you just lost $300,000 of net worth because your neighbor capitulated. That is when the fear sets in. You think, if I don't sell now, will it be $800,000 next month? This is the fear of missing out in reverse. It is the fear of getting stuck. We are seeing inventory levels in major Canadian cities hit 10-year highs. In Toronto, active listings are piling up. In the condo market, it is a massacre. There are thousands of glass boxes in the sky sitting empty, waiting for buyers that do not exist. Why is this happening now? It is the convergence of three fatal forces. First, the exodus. As we detailed in our previous report, 500,000 people are leaving Canada annually. These are not homeless people. These are doctors, engineers, and professionals. They own homes. When they move to Texas or Dubai, they sell. They are dumping their Canadian assets to buy US dollars. This is a structural increase in supply that the bulls never accounted for. They assumed immigrants would buy the houses. But immigrants arriving today cannot afford a $1 million mortgage, so the departing class sells, and there is no one to catch the falling knife. The second force is the investor capitulation. During the boom, everyone became a real estate genius. Your dentist, your Uber driver, your aunt, they all bought investment condos. They used the BRRRR strategy: buy, rehab, rent, refinance, repeat. It worked when interest rates were 2%. You could rent a condo for $2,000 and your mortgage was $1,500. You were cash flow positive. Today, that same mortgage is $3,500, but you can only raise the rent to $2,500. The investor is bleeding $1,000 a month. Every single month they have to write a check to the bank to keep the tenant in the unit. That they are subsidizing the tenant's living costs. At first they held on thinking rates would drop, But Tiff Macklem has made it clear the era of cheap money is over. Now, these amateur landlords are running out of savings. They are realizing that holding this asset is actually a liability that is dragging them into bankruptcy. So they list. They list in waves. And because they are investors, not homeowners, they are less emotionally attached. They will cut the price faster just to stop the bleeding. They are the first domino to fall. The third force, and the biggest one, is the renewal cliff. We have talked about this, but now it is here. In 2026, the massive tranche of mortgages taken out during the peak of 2021 is coming up for renewal. And these people bought at the absolute top of the market with variable rates or short-term fixed rates. They are seeing their payments double. A family that was stretching to pay $3,000 a month cannot pay $6,000. It is mathematically impossible. They have cut the Disney Plus. They have cut the vacations. They have cut the food budget. There is nothing left to cut. They have to sell. And they have to sell now before the bank takes the keys. This creates a desperate seller. A desperate seller does not negotiate. A desperate seller takes the first offer that clears the mortgage. This drags down the comparable sales for the entire neighborhood. One foreclosure destroys the property value of 10 surrounding homes. But for a sale to happen, you need a buyer. And this is the other half of the disaster, the buyer's strike. The media will tell you that buyers are waiting on the sidelines. That implies they are ready to jump in. They are not waiting. They are paralyzed. Or worse, they are gone. Who is the buyer for a $1.5 million townhouse in a suburb of Toronto? It requires a household income of $300,000 to qualify for the mortgage. That puts you in the top 1% of earners, but the top 1% are the ones leaving the country. The remaining buyers look at the prices, look at the interest rates, and look at the economy, and they say, no. They are on strike. They know prices are falling. Why would you catch a falling knife? Why buy a house today for $1 million when the trend suggests it will be $900,000 by Christmas? And the psychology of the buyer has shifted from FOMO to FUP, fear of overpaying. The standoff between sellers and buyers is currently the defining feature of the Canadian market. Sellers are still living in 2022. They are anchored to the peak prices. They think their house is worth what their neighbor got 2 years ago. They list high. Buyers are living in 2026. They are looking at their pre-approval amounts, which have shrunk by 30%. They offer low. The gap between the ask and the bid is hundreds of thousands of dollars. So nothing moves. Sales volume collapses. Real estate agents starve. Mortgage brokers starve, and inventory piles up. The days on market metric is skyrocketing. A house used to sell in 3 days. Now it sits for 30, then 60, then 90. And then the listing is terminated and relisted to try and trick the algorithm. But the market knows. The market smells the desperation. Let's talk about the pre-construction graveyard. This is a submarket that is currently imploding with spectacular violence. 3 years ago, people lined up around the block to buy pre-construction condos on paper. They paid a premium for the future value. They put down 20% deposits. Now, those buildings are finishing. The closing date has arrived, but the appraisal value comes in $200,000 lower than the purchase price. The bank says, we won't lend you the full amount. You need to come up with the extra $200,000 in cash. The buyer doesn't have it. They try to sell the contract as an assignment sale, but no one wants it. When the market is flooded with assignment sales from desperate speculators who are willing to walk away from their initial deposit just to avoid being sued by the developer. But the developers are ruthless. They are suing. They are forcing people to close. This is dumping thousands of units onto the market at fire sale prices, which further depresses the resale market. It is a death spiral of supply. The banks are watching this with terror. They see the power of sale numbers ticking up. In Canada, we don't always call it foreclosure, but the result is the same. The bank forces the sale of the home to recover the debt. Banks are terrible real estate agents. They don't stage the home. They don't bake cookies for the open house. They price it to move. They dump it. When a bank dumps a property on your street, it sets the lower benchmark for everyone. And right now, the private lenders, the shadow banks we discussed, are initiating power of sale proceedings at a record rate. They cannot afford to hold bad debt. They are liquidating aggressively. This is adding fuel to the panic fire. The move-up buyer is extinct. In a normal market, you sell your starter condo to buy a townhouse. You sell the townhouse to buy a detached home. This chain of transactions keeps the market fluid. But the ladder is broken. The condo owner cannot sell their condo because the market is flooded. Their equity has vanished. They are trapped in their glass box. Because they can't sell, they can't buy the townhouse. The townhouse owner can't sell, so they can't buy the detached home. The entire property ladder has seized up. Everyone is frozen in place, and except for those who are forced to sell by bankruptcy or divorce. This lack of fluidity means that the only transactions happening are distressed transactions. And distressed transactions happen at a discount. We are also seeing the cottage country crash. During the pandemic, everyone bought a cottage in Muskoka or the Kawarthas. They thought they would work from the dock forever. Now, return to office mandates are back. The cottage is a 3-hour commute. Gas is expensive. And the variable rate mortgage on the cottage has tripled. The cottage market is flooding with listings. Prices in recreational areas are down 30-40% in some pockets. These are luxury assets. They are the first to be liquidated when money gets tight. And money is tighter than it has been in 40 years. The government is trying to hide this. They are extending amortization periods. They are allowing negative amortization where your payment doesn't even cover the interest, and the unpaid interest is added to the principal. You are literally going deeper into debt every time you make a mortgage payment. This is extend and pretend. They are praying for a miracle. They are praying for rates to drop back to zero, but they know it won't happen. All they are doing is delaying the inevitable and making the eventual crash worse. By keeping people in homes they can't afford, they are preventing the market from clearing. But the dam is breaking. The inventory numbers don't lie. You can fake CPI numbers. You can fake employment numbers. You cannot fake the number of for sale signs on a street. What happens when 500,000 homes hit the market and only 50,000 buyers show up? Boom, Economics 101 takes over. Price discovery happens. And price discovery is going to be painful. It won't be a slow decline. It will be a step function drop. A crash. We are looking at a potential 30 to 40% correction from the peak in real terms. If you bought in 2021 or 2022, you are underwater. Your equity is gone. You are essentially renting from the bank, but you bear all the risk of repairs and taxes. This realization is causing the strategic default. People are looking at their mortgage balance, $800,000. They look at their home value, $700,000. They do the math. They hand the keys to the bank. It is a business decision. In Alberta, this was common in the 80s and 2015. Jingle mail, mailing the keys to the bank. It is coming to Ontario and BC. But the media will call it a buyer's market. That sounds nice. It sounds like a shopping spree. But it is not a buyer's market if you can't get a loan. It is not a buyer's market if the economy is in a recession and you are worried about your job. It is a liquidation market. It is a market where cash is king and debt is death. The vulture funds are circling. The Blackstone groups, the corporate landlords, they are waiting. They aren't buying yet either. They are waiting for the blood in the streets to get deeper. They are waiting for the point of maximum despair. We are not there yet. We are at the point of panic, but not yet despair. Despair comes when the sellers stop hoping for a rebound and just want out at any price. So what should you do? If you are a seller, you missed the top. I am sorry, but that ship sailed 2 years ago. Chasing the market down is a losing strategy. If you must sell, you have to price aggressively ahead of the curve. Be the lowest price on the street, sell, and get out. If you wait, you will be chasing the market all the way to the bottom. If you are a buyer, do not catch a falling knife. Patience is your most valuable asset. The inventory is building. Time is on your side. Let the investors capitulate. Let the renewals happen. Let the panic run its course. Renting is not throwing money away right now. Renting is buying patience. Renting is hedging your bets. The cost of capital, interest, is higher than the cost of rent in almost every major city. It is cheaper to rent the asset than to own it. That is a fundamental anomaly that signals a crash. The spring market of 2026 will go down in history, and not as the season of blooming flowers, but as the season where the Canadian housing bubble finally popped. The signs are there. They are on your street. They are in the data. And they are in the empty eyes of the homeowners realizing that their retirement plan just became a liability. The panic is palpable. The selling has begun. The only question is, who is left to buy? Subscribe to Canada Property Watch. We will continue to track the inventory, the insolvencies, and the insanity of the Canadian real estate market. We are the lighthouse in the storm, And right now, the storm surge is hitting the shore. Stay liquid, stay safe, and don't believe the hype. The sold signs are gone. The for sale signs are here to stay.